Hi, welcome to this tutorial today, which is all about one of the world's best ever Forex traders. His name is Bruce Kovner. Now, he is acknowledged as one of the most successful hedge fund managers of all time. Outstanding track record going back over 30 years. Fantastic profits with very low drawdown. Now, in terms of today's tutorial, what I want to do is go through some high probability trade setups that he looks for, and also some general tips and advice for trading success. Now, the general tips and advice for trading success will come up a little later in this video in the form of my favourite quotes from Kovner. But first of all, I want to discuss some high probability trade setups that he looks out for. And he first came to my attention when he gave an interview in the book Market Wizards back in the 1990s. He was highly successful then. First interview he'd given, and I thought the interview was really insightful, and I'd recommend you go and buy the book Market Wizards if you haven't done so. Not only Bruce Kovner is interviewed in it, but also many of the other great traders of all time. Now, in terms of a trade setup that he outlined, which I particularly liked, which made total logical sense to me, which I hadn't thought about at the time, was this. If you've got a currency pair, it's trading very tightly, there's very low volatility, it's in a tight range, and then suddenly you have a move to high volatility and a big breakout. Now, no one can understand why the breakout is occurring. That is what makes it a great breakout. Kovner makes the point that if no one really understands why a breakout is occurring, it isn't due to speculators coming in on the breakout. It's to do with a change in the big supply and demand fundamentals, which means it's probably going to continue. And I'm sure every trader has seen those sorts of breakouts, and they can't work out why they are occurring, yet they continue and become really good trends. Now, the beginner or the novice trader will not like to trade those breakouts. Why? Because basically they don't understand why the breakout is occurring, so they're probably going to want to fade it, or they want to wait for a pullback to get back in at a better price. It is an uncomfortable trade, but professional traders will go for that trade setup. It's got a high probability of continuation. Now, in terms of novice traders, beginners, the breakouts that they really like are going to be the ones that they see in the media. Okay, so you'll very often see it in the media. All the analysts, bankers, etc. will be talking about if a currency breaks X level, the breakout will continue and go to Y level, whatever the level is. But very often those breakouts fade pretty quickly. Why? Because they have got a huge degree of speculative interest in them. So what happens? All the speculators buy at the same time, then there is no more buying power to make the breakout continue. The breakout naturally fails and prices come back. So Kovner is saying you've got to be very wary of those sorts of setups. If it looks a really comfortable setup, everyone is looking for something to happen, it probably isn't going to happen. Now, the way you can actually check, in my view, is to look how technically overbought a chart is coming in to people expecting a breakout to the upside. If it's very overbought technically, that would lend weight, in my view, to the possibility of failure. Also, what Kovner does is he checks how big the consensus is. He gets polls from all the big websites who give analysis, all the bankers, all the brokers, to see how universal that consensus is. Then he'll look to fade it. Now, it isn't a difficult thing to do. I mean, what we do here is we do a similar sort of thing. We saw one recently. I'm doing this video on the 2nd of May. Now, last week we had one of the biggest moves in years down in USD JPY. The consensus was for the USD to break to the upside. It was a very bullish consensus. The dollar was overbought, so why not try a trade the other way? even if you're wrong, your risk is probably going to be low because you can use a tight stop. The move was actually 500 pips, so it was a substantial move. And I think, traders, beginners in particular, need to get into the idea that if you want to win at Forex trading, you have got to feel uncomfortable in your trading, and you've got to go for trades that the majority will not take. Kovner makes the point that, at the end of the day, the best traders in the world are always contrary to the extreme. They will always question the consensus. They will not be worried about going against it. And he will always say that he will basically think of alternative scenarios. So if everyone thinks the currency is going one way, he'll think of reasons why it could go the other way as well. And he says he does that all the time. Some obviously come off, some don't. Now, in terms of his actual analysis of the markets, he does use technical analysis. But like he said, technical analysis is really just showing you what happened in the past. It allows you to get high probability levels you can come in through, helps you place a stop, etc. But it doesn't predict anything. And he says he likes to know the sentiment behind the move, which we've just mentioned, and also the big fundamentals which are moving the pair. So he likes to have an understanding of the big fundamentals. I think if you're a trend follower, there is a saying that big fundamentals rule the long term, sentiment rules the short term. Big fundamentals, they will drive those big trends that last for weeks, months, or even years. If you know them, you can basically use technical timing to get in on them. They'll give you the confidence, i.e. knowing the fundamentals, not to bank out early. Shorter time frames, of course, you can just trade sentiment and swing trade overbought or oversold. Now, in terms of Kovner, he makes some other really good points about trading, in my view. One of the most important is one that was taught to him by a guy called Michael Marcus, another of the great traders, who told him when he came into trade, you can really make $1 million or more. There's nothing to stop you. It's totally achievable. Kovner says that people often lose sight of that. And by lose sight of that fact, I mean, most traders, how many are totally confident they're going to win when they come in the markets? I don't think most traders are. I think they hope to win more than expect to win. Now, I'm not saying you're going to make $1 million, but there's nothing to stop you actually making money. There is nothing to be intimidated by when you come to trade the Forex markets. Kovner also makes the point that, mistakes, they are just natural. So are bad trades. By a bad trade, he means a bad outcome. If you've made the right judgment in line with your strategy, that is fine. Just take the losses on the chin. Doesn't matter. I mean, there's some other great insight, I think, from Bruce Kovner. I strongly recommend you read that article I mentioned earlier on in Market Wizards. I'm going to give you some more wisdom from Kovner in the quotes that are now coming up, and I've done them over some surfing footage. And for those of you who don't regularly watch me, I've done it over surfing footage because, I think if we're trading the markets, we are like surfers. We've got to catch those big waves, ride them with confidence, and basically get as much out of them as we can. So I think you'll learn a lot, I think, from the quotes from Kovner coming up. If you're a beginner, if you're an experienced trader, hopefully you'll find them useful as well, and I hope you enjoy the footage too. Thank you for watching me, as per usual.